So tell me, Andrew, what is the basic principle behind Goldman Sachs Sustain?
Sustain's really about taking a long-term view of industries, a long-term view of how companies will perform, and ultimately a long-term view of how equity investors should be investing their money to generate the maximum performance. It's about taking a view of how companies will succeed in the long run rather than in the short term, which is where most of the market focuses.
And what is it you're looking for in companies?
We're looking for companies that have the returns and the profitability to reinvest in their business, have a strategic position within their industry to allow them to sustain success for the future, and have a business model that means they're effectively adapting to the environmental, social and governance issues that are going to be important to their sector. In short, we're looking for well-managed, strategically well-placed and high-return businesses.
This all culminates in the Sustain Focus List. Tell me specifically what that does.
The Sustain Focus List is the result of all of the work that we've done across 22 different global industries to identify the future industry leaders in each sector. It's about finding the companies with the high levels of profitability today, strong positions within their industry to sustain that success, and a management team that's effectively operating their business in terms of environmental, social and governance issues in a way that will allow them to continue adapting to the new challenges and opportunities that they face.
And what typifies the leaders for you?
Leaders, generally speaking, are those companies with profitability today and a long-term view of how they reinvest the money that they're generating into building a business for the future. Rather than focusing as much on short-term results, they're those companies that are building a business for the world of 5 or 10 years' time, and they're taking a more holistic view to the challenges they're likely to face. It's about companies that are effectively understanding where are the different possible sources of pressure that I might face, and what do I need to do to adapt to those possible sources of challenge.
And you mentioned then the next 5 to 10 years. What would you say are the big headline issues, the big challenges that businesses have to be responding to?
Companies over the next 10 years are going to face a huge increase in demand in every market that we look at. The combination of population growth, economic growth, rising levels of consumption will mean that in essentially every industry, demand growth will be huge, and it'll be predominantly outside of today's developed markets where it's most concentrated today. Along with that, we'll see increased competition. In every industry we look at, companies will be competing with a much wider range of competitors than they have in the past. Industry structures are changing more quickly, the sources of competition are becoming more varied. And finally, the challenges that they face in meeting that demand through the resource constraints and environmental tensions that are becoming increasingly apparent will introduce a whole new range of challenges and pressures for companies in every sector.
And are there any regions which seem to be best placed to respond to these pressures?
The areas certainly with the tailwinds are those parts of the world where demand is growing most quickly. That essentially means the emerging markets and the BRICS economies in particular. Countries where you have domestic demand growing particularly quickly really gives companies there a tailwind to really build businesses for the long term. Those companies outside of those regions that can effectively tap into demand in turn have a chance to effectively expose themselves to the same trends, but companies that sit within developed markets without taking a more outward view, without trying to think about how do I adapt to the future world, will find it increasingly hard.
And one of your most recent research reports is titled Crossing the Rubicon. Tell me a bit about the background to that.
Crossing the Rubicon and the report we put out recently within Goldman is the culmination of the work that we've been doing for the last 4 or 5 years within Goldman Sachs, understanding how companies are adapting to long-term pressures. The title itself is designed really to indicate, I think, we take the view, we're shifting from the early recognition that environmental, social and governance issues, long-term pressures are becoming more important, into an environment where they're having a very real, tangible impact on the way that companies perform. We're past the point of theoretical interest, we're into the point of financial impact. And increasingly we're going to find those financial impacts become bigger and bigger on companies within different sectors.
And a lot of the language in the report is really quite dramatic about the global crises.
I think it's fair to say a lot of the impacts will be quite dramatic. If you look forward over the next 10 years, a lot of the trends that we're talking about are things that have been in place for many decades already. It doesn't take a huge leap of faith to believe that the world's population will grow, the pressure that that will place on limited natural resources will intensify. So most of the things that we're talking about in themselves are not particularly new trends. What is new is the speed, scale and impact of those trends. Everything is happening on a larger scale than ever at a faster pace with a bigger impact on the way that companies perform financially.
And is the investment community really understanding the scale of these issues?
The investment community, much like the business community in many ways, is beginning to understand that there is an issue here or a challenge here that doesn't necessarily lend itself to traditional approaches to research and to investment. Similarly, dealing with and investing in an uncertain future world is something that we simply don't have traditionally the tools to do within the investment community. I think what we're finding is an increasing demand for tools that will allow people to adapt to the challenges and the future pressures that companies will face in different sectors, and understand what does this mean for my investments, how do I approach this as an investor with a long-term horizon, and GS Sustain really is a function of that, and the work that we're doing is meeting that growing demand.